The Bay Area housing market has been on absolute fire for the last year, really. And parts of the South Bay are starting to experience signs of slippage, but there are some cities that are still experiencing way higher than normal activity levels, buyer demand, way lower than normal inventory levels, and all of that is coming up on this Bay Area Housing Market Minute. A couple South Bay cities like Cupertino, Campbell, Los Gatos are starting to see signs of a slowdown. However, other cities are doing just fine, and they are weathering this, and they are just popping off like nobody's business. And what we're going to cover today is the city of Milpitas and going over what's happening in that marketplace and what would need to happen in order for that market to even just become neutral again. But before we go into the data, if you are a home buyer in today's Bay Area market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the zip code or neighborhood or area that you're looking in, and we will send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a data set to assist you in your decision making and or pricing your property, you can go ahead and text the word data plus your property address to the number down below, and we will send that straight to your inbox. It has been over a year in Milpitas that the sales price to list price ratio has been less than 100% for 12 straight months. Now, we have seen sales price to list price ratio exceed 100%. What does that mean? Well, that just means that the market keeps building on top of itself month over month over month over month, putting continual upwards pressure on prices. And if you've been looking for a home in Milpitas, either you've overpaid at some point in order to win that house, and now you're sitting on a fat stack of equity, or you're still looking for a house and you've been outpriced by the market again and again and again. Looking at this month, we had 108% sales price to list price ratio. Now, here's what that means. Over the last 12 months, we've experienced a continual one-upping of the sales price to list price ratio every single month. And so it's interesting because in some parts of the Bay Area, we are seeing the sales price to list price ratio slip, but not in Milpitas. So we'll see if and when this starts to fall, but it doesn't show signs of slowing down anytime soon. Now, if you look at the Milpitas inventory levels, we're at 30 active homes on the market versus 55. Look at this, 55. If you see your screen, homes pending. That is nearly double the amount of homes pending that we have active on the market right now. If you're a home buyer and you're thinking, well, when is this going to slow down? The answer is not anytime soon. So you would be wise to overpay now as opposed to sitting on the sidelines for another 6 months, because the lead metrics indicate a healthy Q3, Q4 for Milpitas. Now, if you're looking at what would need to happen in order for the market to neutralize or stabilize, you see the yellow graph on your screen. We had, in July of this year, 0.5 months of inventory based on closed sales. The market would need to, or the amount of inventory would need to go up 6x in order for us to reach what economists would consider a neutral market. Think about that. We would need to go up from 30 homes to 180 homes on the market. This is not something that could ever happen overnight. This is something that would happen gradually over the course of 6 to 12 months. And so if you're on the sidelines right now thinking that in 6 months it's going to be better, the market is only going to appreciate for the next 6 months. Think about that. It's only going to get worse over the next 6 months for you if you're a home buyer. And so the people who buy today are going to, in 6 months from now, be sitting on a fat stack of equity. Now, at that point, whatever happens is anyone's guess. However, if we're just looking at the lead metrics, it makes no sense to wait on the sidelines if you're a home buyer in Milpitas specifically and expect the market to go down, because it would take an act of God, literally, for the market to free fall anytime within the next 3 to 6 months. And even more so, think of it from a buyer demand perspective. Not only are we in Silicon Valley, the hottest marketplace where employers are giving their employees money hand over fist, We have a situation right now where in Milpitas, the absorption rate is 193% in the month of July, which means that for every home that sold, or for every home that was listed on the marketplace, 1.9 homes sold. So what would need to happen is we'd need to have a 33% absorption rate in order for the market to be neutral. For that to happen, if inventory levels were to stay the same, we would need to see the absorption rate. We'd need to see buyer demand fall 160%. Think about that. In what possible scenario could we see 160% of today's buyers evaporate? It's not going to happen. Now, that is obviously there's room for debate there, of course. But what I'm looking at right now is simply a recipe for a white hot market for months, if not over a year to come. And you can rely on the Bay Area Housing Market Minute to keep all of you up to date. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.